right? Think about the less certain you are about the direction, the less conviction your risk management should demonstrate. So what should your risk levels look like right now during this possibly transitional area? Shouldn't be a lot. If you are taking a lot of risk, tell me on what, which way, what's giving you the confidence to do that versus saying, yeah, I want more information. Right. So let's look at, there's SPY. Let's come look at QQQ. QQQ looks worse. The QQQ says no, there's no bounce. It's just heading down. So we've got one bullish followed by a bearish kick down. We've got one bearish. I would expect DIA to be very similar to SPY. They tend to correlate. Ooh, but in this case, no. That's 2 out of 3. The model says is going to continue down. That's certainly a concern. IWM. Flat. So we've got one slightly bullish forecast followed by a bearish move. We've got one sideways, which I would actually read this more as indecision than anything else. And we've got 2 more negative. So the model is telling you, be careful. If you want to speculate, do we want to speculate now? Okay, so let's talk about that. Right? If there's ever a time where you're like, yes, I'm thinking of going now. Now, here's my concern with that. Right. First and foremost, we've got 42 minutes left in the day. We're off of the lows and the volume is basically looking to be, I would say, average, right? Average is 60 million. We're at 47. I think we might get a little bit above that, but we won't be at this level. We won't get to 85. And you can see that was an engulfing day to the downside, where this one, we're very close to holding those lows. We're only down 0.19 on the S&P right now. Right? Let's go ahead since we're here. Let's get the quiz in. Chris said, took one hedge off for profit, closed most bullish positions, sold from premiums, also hedged. That's the kind of plan that makes sense. Balanced, risk controlled. There should be a very specific why behind the actions being taken. Why are you doing this? This is why, right? This is why. Let's get to a 5-minute chart. There you go. Look at that. Look at the bullishness I bring to the market when I start speaking. It's like right here, I start the meeting, I start talking, boom. No, I'm just kidding. But there is a little bit of a surge there, right? And that's bringing in, all of a sudden, the volume coming in now is more of the buyers. Okay, so let's do this. I'm going to go here, A's. Here, B's. Down here, C's. A, B, C. Where do you see it? Chris is a B, says it's going to end in the middle. Phil is a B, says it's going to end in the middle. Bob is a C. Bill is a C. Brad is a B. LK is a C. Okay. Scott, I'm going to join the C club. This is me. We did have a hard push up, but we are very overbought, and it looks like it's rolling over. I think it could come down back into C territory, and then right in this area over here, make a push and possibly flirt with that B area. But I don't think it's going to do much more than that. So I could see the B's happening. Let's see what Stella thinks. Come on, Stella. What do you see here? I'll tell you this. As I evaluate, as I talk to people over the last 5 days, in coaching settings, I don't ask, oh, are you making money or losing money? What I ask is, are you trading well? Right? Are you trading well? That's definitely a big one. Are you hitting obstacles? If so, what are your obstacles? Are you hesitating? Are you rushing? Are you forcing? So the question I want to ask you is not, what is your outcome? The question I want you thinking about is, what's the process telling you, right? What is the process telling you? All right, let's go forward. Let's get this to the intraday. All right. And here, Stella says that we're going to top out, roll over, and by the time it comes here, 396.94 is the close at 3 o'clock p.m. Central Time. 396. Ooh, 396.94. So Stella thinks that it's going to be a B. She actually agrees with my assessment that we're going to come down, but stabilize and pop back up into this area here. So Stella is a B. I am a C. John is a C. No A's. 8-ball process, right? So, okay, there it is. Let's keep going forward. Let's get back to the information we're processing for what happens next. So like I said, what am I seeing? When I look at the longer term, I think things actually look best here on the 3-year weekly. We don't have any volume. This is a 20-week average volume. Anything that whatever is showing up here, that's my frequency. So it's weekly frequency. So this is a 20-week moving average. And you can see there was some big volume back here when we were selling off. Right? 600 million, 725 million, 650 million, 500 million, and even in here 650 million. Where are we now? 300 million. 330 million. Now, obviously, this doesn't count because we're only halfway through the week, right? Actually, at this point, we're 3/5 through the week. But when you think about what is 200 million, 3/5 of, right? That puts us around maybe 320 million. So we're not seeing a surge of sellers. We're definitely seeing sellers, but is it like, oh, this is as bad as it was? I don't think necessarily so. What are my concerns, though? Like I said, my concern is, number one, if we bounce, do we only get one of these? One of these, one of these, right? You can see they're very similar. 3 days, fall back down. 3 days, stop, fall down. 3 days, back down. So I'm worried that we get 3 days up, it stalls, back down. What will the VIX look like if that happens? John's talking about the VIX. We should be talking about the VIX. This is concerning as well, right? This is concerning as well. Remember, we talked about initially our concern was here. Then that concern continued here. This is one of the hard things. When we talked about that on Fridays, we said we don't want to have to wait until it's all the way up here. I want to make sure now. It could have been here. Mine was there. When it crossed that line, that was the trigger point. What is my concern now? We have pulled back a little without the market really doing much, but if we move up for the next, if we move higher for the next 2 or 3 days, we would expect the VIX to move lower for the next 2 or 3 days. And if it only drops down here to 24, even 23, what do we have? Low, higher low, higher low still. And you kind of had something similar here. You kind of had this pop up, and then you had one little pop, came down, and then the big one, right? And then the big one. So I'm concerned about that. And if that were to happen, at this point, it wouldn't be really a hedge anymore. It's a hedge. It's a hedge when you have bullish trades that you're managing through, right? It's a hedge in that it gives you the ability to start capturing some gains as the market is working against your bullish trades, right? So if you don't have very many bullish trades, then it's no longer a hedge. This is no longer a hedge. Now this is a speculative position. So what would we do? Well, we'd probably look to see where's the money flow, right? Where is it going? Okay, so let's talk about what else is going on. We've gone through that. Anything else in the news? Bed Bath & Beyond getting crushed, apparently. I'm actually surprised that this survived way, way back when. BBBY. It did pop up. It did roll over. Now it's dropping. That was a tough one. That was one I said I think that was the one. Wasn't it the one I was looking to trade? I think I just missed it. It was just never really gave a great signal. Maybe someone looked at that and said, that's it. That's where it's dropping, and they got in before this little drop right here. Yeah, it's just a lot of volatility in those meme stocks like GME. GME definitely, if it rallies up a little bit, looks like a great opportunity for a short. So certainly, as you think about your shopping list and what you want to trade, there really should be a sense of shorts. And if you're going to start shorting, where is that going to come? So let's talk about that. Let's see. We look at the economic calendar. What do we have going on? Tomorrow, jobless claims, some manufacturing. Then on Friday, we have non-farm payrolls. That's supposed to drop. This is something that's interesting. I actually saw someone come out and talk about the fact that that in order to curb inflation, we have to be prepared to watch the unemployment rate drop or rise to upwards of 4.5%. 1% is not that much, right? That's 1.8 million approximately jobs lost that would cause that to shift. But certainly that will bring some pain with it and raise the expectations of the likelihood of a recession. Remember that markets closed on Monday. Okay. Let's take a look at the research. Now, our correlation has improved significantly. We actually said that according to the correlation, we would expect a drop because that's what happens from here to here. But from here, we would expect the possibility of a rise because that's what happens here. And after that rise, we might have another drop and then the possibility of a bottom. So the question then is, how does this play out? Do we go up a little bit, down not too much, and then start to turn? That's definitely something that I would trade bullishly, 100%. If we bounce up and have, more than just 2 or 3 small days, if it only goes up 2 or 3 small days and it starts to bounce, then I'm going to be looking at this window as a bearish window. If we have a pretty strong recovery, then I might think it might be a small window, which leads to the next bullish trade. So what happens over the next 2 to 4 days is absolutely critical for us in determining what we think is next. Because other than that, we don't really have a lot to work with right now, right? We don't have the information that we're hoping for. Let me know out there, what does your risk level look like? Normal, higher than normal, lower than normal, a lot lower than normal. This is an interesting period of time. We need to be prepared with how we're going to trade it. Meta's doing well. That was actually one that was on our list of candidates. But look at that. There's really no trade there. It's up today. It was up way more before, and now it's coming back down. Medical devices is doing okay. Entertainment's doing okay. The chips are struggling. Losing money every day because you're in cash. Yeah, slowly but surely, right? That's a losing game with inflation at 8%, without a doubt. Yeah, right now, nothing really looks. We got a little bit of money here in medical devices, healthcare. Financials are down, technology's down, communication services okay, a little bit of okay in the consumer defensive. Let's go through it. Let's go through our watch list and see what it tells us. Oof. So I liked Alcoa as it made this new high. I thought if this thing can hold. Now right here, you can see we're right at this support level. I'm a maybe. If it could hold right here, maybe get a little ground back today. I don't love that it's down 3% today, but the volume's not much. I am definitely thinking about materials stocks again, whether it's natural gas, whether it's aluminum, something along those lines. Apple. This is a little bit scary, right? Because back in here, way back here, we were saying, hey, we're liking this because Apple is a bellwether. As Apple goes, so goes the rest of the market. So when we see Apple make this nice, strong move, that gives us good prospects about the market itself. But when we see it break down harder, and start showing this a little bit more concerning. Let's give this a look-see on this chart. Yeah, not much. If it only retraces less, if it retraces less than halfway, I'd be okay with this. I think the long term showing this, remember what the long term is showing us is that the institutions started to like things better. Have they taken a break now? Yes. Have short-term traders put pressure on these stocks? Yes. Does that mean the institutions are done? Not necessarily. Yeah, not necessarily. They may just be positioning and maneuvering to try to pick up more at a better price because they know that they're ready to go further. We know that the institutions are sitting on a bunch of cash. There's a lot of cash. We know that they're likely to start doing something if we don't see it drop. And so this last drop might be the one that people use to evaluate whether or not we've seen seller capitulation. Okay? Let's keep going through the watch lists. Chips. Oh, look how ugly they got so fast. They got ugly so fast. I would short these at this point, personally. Not here. I don't mean at this point meaning today. I mean at this point meaning if we get a couple of days up and we hit this consolidation, yeah, I think, you know what? They could be maybe not all the way down here, although I think that's on the table. I definitely think through here around 145. So if it gets up to 155 and rolls over, yeah, can I risk 3 to make 10? The U.S. is officially experiencing an economic recession, according to a Monday statement from private nonprofit research organization, National Bureau of Economic Research. They have a big fancy website, nber.org. Bob said, if you want to take a look at that, nber.org. Are they the official declarers? Have they done declared? They do declare. Or is there a government recessionary declaration panel? It's like the dubious goals panel. It's a thing in England. National Bureau of Economic Research. I think I've read some of their stuff. It's actually not bad. They have some interesting, I think, if this is the one I'm thinking of, they put out like a monthly report where they compile different sets of data to help process exactly what we're talking about here. Yeah, that's worth taking a look at, I think. Sorry, I accidentally closed my question panel out. 1 second. So what do we know about this market? Shouldn't be in a rush to trade, not in a rush to trade. Certainly need to be ready to go the other side if necessary. We certainly need more information. Well known for providing start and end dates for recessions. And they say we're in it now. Well, I believe it. I believe it. Okay. Watch list. Let's get back to it. So as we go through this watch list, certainly these were things that we're like, oh, I like them. Well, be water, my friends. If it turns south, then be ready to trade it south. I'm not thinking, oh, if this turns from here, I found a bottom. No. This is now a falling knife. So don't try to catch it. ADM looks pretty good. And it's in the right area of the market, right? It's definitely in the right area of the market. So consumer staples is certainly something that we could have expectations of seeing go the other way. AMD doesn't look as bad as ADI, but still definitely looks bad. New lows. I've changed my thought process on chip stocks. AMZN, I would actually still maybe be okay with this one. You're going to be hard pressed to find a bullish stock that hasn't broken to a new low. But remember, I say I give it one time as long as the general trend is still intact. And it does look like that is the case. But it's certainly not giving us any kind of a buy signal now. AXP, new lows, maybe. Boeing's actually holding on pretty well. I would consider Boeing. Sellers have a chance. They're not breaking through 160. That's worth looking at. Chinese stocks. So the Chinese stocks seem to be showing, if you remember, I've drawn this and talked about these. I said something very specific has to happen. We have to break out here. We have to consolidate, and then we have to turn. And then if I can put my stop loss here and then get my target moving maybe up around there, well, then we have something tradable on our hands. Okay. BAC, not bad. I mean, it had one big bearish engulfing day. It wasn't on big volume. We're holding this old resistance right here. You can see it was support. Then there was a break. Almost touched it. Then we got up here riding along. I think that's a good support level. I think BAC is one I'd think about. BBBY looks terrible. Dutch Brothers. I think I told you Dutch Brothers makes delicious fruity flavored green ice cream teas. Oh, it's yummy. I had one that was strawberry, something else, and coconut. Oh, it's yummy. Yummy, yummy, yummy. If you haven't ever been, go to Dutch Brothers. I'm a Starbucks fan, but now that there's competition, I'm gonna be going both places. I think that one's close. Would have to decide. We'll look at Starbucks. Caterpillar, maybe. Caterpillar, if it can hold higher than, if it can hold around 185, I think that's worth thinking about. ConocoPhillips, oil. Now, oil is down, right? This is oil. It's now okay. So let me take that back. It is down, but it has gone through a bit of its reversal process. We busted up, come back. I think that could turn. Now, with that in mind, that's a leader. It's been going up. It's come back. I would love to catch that turn. That is something I would look to trade on oil. So you can see we're starting to consider other things that we hadn't been considering, like some commodities, things like that. Costco. I'd say Costco's still on the table. If Costco turns up, I would look to take the trade, set a stop here, set an initial target here to sell half, and then see if we can't get a little higher after that. Absolutely. DBC, that's in that same vein with oil and natural gas. I think that's in the range. I like John Deere better than I like Caterpillar. I've just decided that. John Deere looks very strong, right? If industrials are going to recover, that looks very strong. So put it on the list. Am I right? I am. The Dow looks okay. We're looking like a doji today by the end of the day. Maybe it does hold. Maybe we get this doji. Maybe tomorrow we get a little buying. Maybe we decide to put something bullish on. See if we can't ride it for now. What would the time frame be? Mine would probably be 2 or 3 days with all but maybe a piece, just in case we do have a little bit of a V bottom, right? Just in case. Disney, I think Disney still looks okay. Is it a little lower than this low? Yes. Enough that I'm like, oh, it just broke. No, it looks like it's still holding this old resistance. Closed the gap, but didn't break back below it. Disney's on my list. Ford, still on my list. Ford's holding pretty well. FCX materials, you can see how that looks very similar to what we saw on Alcoa, right? So aluminum, copper, very similar. Take your pick, but I would say that brings a defensiveness that we could definitely be thinking about. FXI, that's a maybe. GLD, nah, I don't like gold. More basic materials than precious metals. That's what I would say. Maybe silver convinces me otherwise. IWM, it's a little lower than I would like to see it, but okay, we'll keep an eye on the small caps. We definitely don't want to see the small cap start leading us to the downside, right? We do not want to see that. Jets, it's close for me. That's still close. Meta, I don't know. I think we need to see how that settles out. It's definitely got a surge in its volatility. Marvell, I'm not interested in chips. I can tell you that right now. I don't have any interest in chips. I keep hitting buttons. I'm not interested in chips unless possibly bearishly, right? So if this thing goes bearish, where is it going to be? It'll probably be technology. It'll probably be discretionary. It'll probably be communication services, financials. So those are the ones that I'll be looking at. Or barbecued, yeah. Okay, Microsoft. Same as Apple, right? We know that we have two primary bellwether stocks that we keep an eye on. One of them is Apple, one of them is Microsoft. They behave very similar to each other, not always. Apple moved sooner than Microsoft did, but very similarly, and neither one of them looks very good right now. Excuse me. I need to drink more of my afternoon coffee. Neo, no, it's close to earnings. I don't like it. It's very flat right now. Nvidia is a no. Nothing from chips other than if chips have a lower high, we should be talking about shorts, buying puts, bear put spreads, bear call spreads, something along those lines. Bill says, take a look at Netflix, and I will. I like Netflix. I think Netflix is holding on there. Yeah, I would agree. Let's add it to the list, shall we? It's not there now, but it could be setting up, right? Almost looked like it was, but it's hard to trade into a day like that. Nvidia QQQ still slightly above. Now, if we get 2 days up and then it starts to stabilize, then the buyers have not done enough. And I'm thinking that's the time. If you've ever wondered, Scott, when would I put on a bearish trade? Well, first of all, you would have to make some assumptions that the market is showing more signs of bearishness. And we see that in what we've looked at. But you would also have to be thinking about your overall portfolio and what would make sense to bring balance to what it is that you're doing. Here's Starbucks. Starbucks is interesting, actually. I don't know why there's a line through the candle, but that's interesting right there. I would say that's worth considering as a possibility, right? That if we get a couple of days up, maybe we get up here, just catch a nice $2 move. Maybe put the stop loss here, 70 cents of stop to make what would we get? $1.80. Yeah, not bad. Okay. Switching to the Heiken Ashi, you can see this is showing accelerated momentum to the downside, but we already oversold down here. Okay, SMH, semiconductors, we've already talked about that. Not going to beat the dead horse. Certainly not looking for a recovery. I need a lot more done to think that's going to do anything else as of now. Okay. Tesla trying to hang on, but it's been a little bit flat here recently. UNG. See, that looks pretty good. That's a similar kind of a thing. Now, last time I said, we need to wait. It kind of looked like it was going to pop, and then it didn't, and then it finally did over here. I think there's a very good chance the same thing happens. So I'm definitely going to wait for this thing to settle down. But I'm looking at it, right? Let's see what Stella thinks about natural gas. Sorry, let me get in here. And let's look at somewhat bullish. You might think, oh, look at that. It's very green. Well, yeah, somewhat bullish, but bullish. Visa, negative. Okay. The VIX is down, but hardly at all. So if we see the VIX pull back a little bit and then start to turn, that's the trouble zone, right? Anything in the next, I'd really like to see it get below this halfway point. If it got down below the halfway point, that would make me think, even if it didn't get all the way down here, maybe we see something like this. Okay. XLP, Staples. I actually am surprised how much this got hit. I still think there's viability there, but I think that Archer Daniels, ADM, is a great representation and is all I really need in that circumstance. Let's go to XLU. Yeah, we have taken that out, but you'll notice we're right at like this old level through here. Maybe we're a titch below it, but overall, okay. XRT. So retail doesn't look great. Yeah, I don't know. I started to like that, but I'm bouncing that one. Utilities, I'm still okay with. So my defensive mindedness would be things like Archer Daniels. It would be things like XLU. Like I said, I would be willing to take a stab at some bullish things if this market can start to bounce. I would look to take profits in 2 to 3 days, tighten stops, and be ready to hedge and or speculate to the downside very quickly. Where am I speculating to the downside? I would say chips. I would say financials. And that's probably about it. I like the way John Deere looks. I think John Deere looks strong. What do we say about Starbucks? I think Starbucks looks pretty strong. Apple, not so much. Archer Daniels? Yes. AXP? Maybe. Bank of America? I would still say yes. Costco? I would still say yes. John Deere? I would still say yes. Ford? Yes. It's a good number already, right? No. Nothing in there. Meta's a kind of a maybe. Netflix, I would say, still is a yes. Starbucks, maybe. UNG is a yes. And XLU for me. There's a pretty good list of things there. If I traded them, I would have some level of balance, but I would definitely be ready to do some kind of puts on the market if I have a low overhang. WM. Oh, yeah. Waste management. Let's take a look. Waste management looks pretty strong still. I would agree. So here's what I would say. I know people come and they're like, well, are you putting a trade on? Don't be in a rush to trade right now. Look at what we see. What's making you want to hurry? What about this market's making you want to hurry and put something on versus saying, woo, this looks a little shaky. Let's let the dust settle. When we're clear on what way the dust is settled, we'll look to go ahead and get back in. Whichever way you look to get back in, you should have an immediate definition of what would cause you to think the other way. So if I'm like, oh, I just got a lower high on the VIX, or excuse me, a higher, lower high on the VIX. I'm going to put some bearish things on. I know where those things are going to go. SPY puts, chips, maybe some financials or retail. Okay, then what? Then I'm going to have an immediate idea of what would cause me to think the other way. I don't think the volume supports a big move down as of right now. If it starts to accelerate, I'll change my mind. But as of right now, I don't think it supports it. Let's go finish up with the quiz. I'm being told that the C's are going to win. The volume, whoops, let me go back to the volume. The volume, as I said, I thought it would get up around average. Average is 59.5. We're at 61. We still have 2 minutes. So yeah, about 60 million. Definitely lower than the previous day. Where are we? We're at the lows. There was a big struggle here right at the end, right? A lot of whipsaw, up, down. So what we said was looking like it was happening, and then in the last 15 minutes, it sells off again. C's, you win a shiny gold medal. Well done. I'll be here tomorrow. I'll be here tomorrow morning. I'll be here Friday morning. We'll take Monday off, I think. I'll be here Tuesday, Wednesday, twice, Thursday, Friday of next week. Well, Vlad's taking a vacation at a good time because the market's trying to figure some things out. We are going to work together to try to figure it out together. Okay. Right? We are in it together. We are going to work on it as a community. We'll try to figure this out. And if we don't, well, we won't get hurt too much because we're going to keep our risk under control. All right. I've got to run. It's good to see everybody. I will see you tomorrow morning. We'll see if the futures give us some indication of what's going on. And I will leave you, as always, wishing you happy trading.